How worried are you that this is not just a temporary correction in their stock prices, but something longer term in those stocks? And secondly, how worried are you that this may presage weakness in the broader market?
Not that much. You know, last earnings season, we saw the tech names sell off. And then once we finished the earnings season, money migrated back to tech. Look, there's a reason that clients and investors and traders want to go into tech. They have become a safety trade, but they have been priced to perfection. Microsoft came out, and in fact, they did pretty well, but there was a little bit of a shortfall in their guidance. So the earnings next week are going to be very important to see whether or not the market continues to punish them. I think what you're seeing, Tyler, also is that many financial advisors, this is on the retail market, telling their clients, suggesting to their clients that they take profit while they can. And there are other concerns, obviously, that the market may be more jittery over the course of the summer. You have concerns over the fiscal cliff that we may not see a resolution until early August. And then you also have concerns over, again, geopolitical risk with China. And then you've got the election. But also with tech, you were supposed to have the commission talking to them, the agency in Washington, D.C. with the big five. I think it's been postponed. But that regulatory concern over is not going away. And I think the market is also beginning to worry that if the Democrats do win across the board, they have been far more vocal about breaking them up.
Right. Mark, back to you, if I might, with a question about how dependent the market and the economy are on Washington, both fiscally and monetarily. If there's no fiscal breakthrough here, what happens if the Fed, just sort of pulls back a little bit? I mean, how dependent is the market on D.C.?
Well, I think at the moment, highly. I don't fear that we will have either of the aforementioned considerations develop. I don't think the Fed is in any position when you have the head of the Federal Reserve, Jay Powell, saying we're not even thinking about raising interest rates. You kind of get the messaging loud and clear that they're going to be pressing on more accommodation rather than less. And I think fiscally, it would be political suicide for either party to step in front of another phase 4, if you will, in terms of the package. That's only a question of what size it's going to undertake rather than if we see it. But should they fumble this and we go to some extended period beyond the intended recess on August 7th, I think the market would begin to worry, because obviously we're already starting to see hints that the economy may be decelerating somewhat from that V-shaped rebound in activity we saw over the last couple of months. And without the fiscal response helping to support particularly small businesses and individuals on unemployment insurance, I think that would be a disaster for equities.